Hey, what's up guys? In this video I'm going to show you how you could set up unearned revenue. In this example, I had a client who paid me in advance for my bookkeeping service, and so I wanted to share a couple ways that you can actually do this. So we'll start in the chart of accounts, and you want to set up your unearned revenue as a liability account. So we could first start there, and we want it as a liability because we haven't actually done the service yet. We've been paid for it, but we want to put that on the balance sheet. And me personally, for my business, I like to have my income separated for my monthly bookkeeping services compared to like cleanups and stuff like that. So I have a income account called monthly bookkeeping, and I set these up because when you do an invoice, you want to do the same thing in the products and services. So when I made the income account, I just mapped it to my monthly bookkeeping, and then the unearned revenue you want to set up the same way, but you want it to map to that liability account. So it can be confusing when you set these up, but whatever you want to name this, unearned revenue or prepaid income, you want to set up this income account to that liability account that you set up in the chart of accounts. So with that, we'll come into the bank transactions, and we'll just record this from the bank feed. So we'll say he paid me in February and he's paying for March and April of next month. So we'll put the account as unearned revenue. We'll put it all into that liability, and we'll have our customer. So we'll say Randy Johnson, and we'll post this. And then when you come into the balance sheet, you'll see that the bank account went up 600, and you have your unearned revenue as a liability at 600. Okay, so let's create an invoice. This is one way that you can do it, and I'll show you how you can do a journal entry too. But for my business, I do recurring invoices to all my customers, so this actually makes sense for me. So we'll have our customer, Randy, and we'll set it up for the 1st of March, and I'll make it a due on receipt. So if you want to do a recurring, you can click on this manage. If you don't see this box, you can click on this gear icon here, and you can do the scheduling, and you can make a recurring invoice and then name it whatever you want for the template. If you want to send the email to your customer as a receipt, you can, and then you would do the start date on the 1st of March. And because I'm doing this in 2025, I can't actually set this up, but you would have it end after 2 months. So I'm in November right now, so for an example, he paid me in November for December and January. So then you would set it up like this. So then the next invoice will be created on the 1st of December, and then the last invoice will be created on the 1st of January of next year, and you would save that template. But for now, we're just going to keep that off, and I'll just create 2 separate ones to show an example. So we have our income account. So So this would be my monthly bookkeeping. I charge $300 per month. And then the second box here, we're going to put our liability account. So we'll have our unearned revenue. And this is where you'll have a negative 300. Okay, so it'll be a zero invoice, but this will make sense on the balance sheet and the profit and loss. So we'll save this one and we'll create one more for April. And then once you set these up, you should be done with all of it. So you don't have to worry about it for the months that were already paid for. So we'll have the same customer and we'll have it paid on the 1st of April. And then again, we'll have our income. And our unearned revenue. We just want to make sure this is a negative 300 to make it zero. Okay. So once these are created, you shouldn't have to do any more work until that end of April is done, and then you can figure out if they prepay you for more months, then of course you can just do the same process. So we'll refresh this and I'm gonna do the end of February. So we're at the end of February, right? We still have our unearned revenue at 600 because we haven't gotten to March yet. But when we get to the 1st of March, we should see the unearned revenue go down. So there's the 300, and then we see the income account go up 300 because now we actually are doing the service and we're getting paid for it that month. So we have our monthly bookkeeping at 300 in the P&L. And then same thing for April. Once we get to the 1st, we should be all caught up. Our unearned revenue is at 0, and then you'll see our net income at 600. So that's one way to do it. If we go back into, let's just delete these real quick. So we'll take out the invoices, and let's just say we're gonna do a journal entry for both of these. And you could do the same exact thing. You can make the journal entry recurring, so if you don't want the invoices in there, then this is probably a much simpler way of doing it. But I wanted to show the invoice at least. So we'll get rid of this March. And then the journal entry is just a simple, you're just decreasing that unearned revenue and you're increasing your income. The same exact process. And this is super slow. All right. So let's do the journal entry. And we'll set the dates up the same exact way. So we'll do the 1st. And we can say unearned revenue journal entry. So when the 1st comes, we will increase our income. So of our monthly bookkeeping at 300. So we'll credit that. And then when our liability, our unearned revenue, will decrease, so we'll debit that. And right down here at the bottom is where you can make it a recurring journal entry. So you can do like the same type of process, and you can make it a scheduled recurring journal entry, or I guess you could make it unscheduled, but this would make more sense. So you could do the same process as the invoice, but we will just cancel this for now, and we'll make one more here. And the balance sheet will look exactly the same like we did on the invoice. So now we want to do the 1st of April. Okay, and then our income will increase by 300. Our liability will decrease. So those will both be set up. And again, we'll go at the end of February just to show you. So we have our unearned revenue, same thing at 600. We come into the 1st. And now it's starting to decrease. We have our net income. And the same thing in April. So once April hits, we should have nothing in the liability account, and everything should be in the net income. So there's 2 ways that you guys can do it. It's just something that I've just learned as I received a check from my client for the next 2 months. So I just want to share that with you guys. If you have any questions, please leave a comment, and I'll see you on the next video.